Hey you guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. This time it's Tuesday, October 21st, and we're going to talk about all things Bitcoin, Solana, Tesla, MicroStrategy, a little bit of IBIT maybe, and MicroStrategy pair trading, Tesla MicroStrategy pair trading, and more. But remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So with no further ado, let's jump right in. But first, a special thank you goes out to these folks. Spark 8005 said, enjoyed seeing you on DCA, Gary. Thank you for your attention to detail on TA or technical analysis. CCJ56 said, I need to get in on this. Amazing video, G, and perfect timing. Gracias. Bonkerino, I like it. You're a class act, Gary. Thank you for sharing your knowledge and also the manner in which you're doing so. And two quotes here from Joe Biden's Daycare 275. And the first one, he said, I love how you hit on the time frames again. Patience is the key in the market, and building your bags is key. Not wasting money on the Lamborghini now will allow us to buy 10 to 20 of them later. Love the mindset. And as always, Sensei, thanks for another great video. And also breaking down the trade videos. He enjoys those and said it's a nice walk through them. It's nice to walk through them slowly to understand the why behind some of these trades. So thank you, Sensei. Thank you, Joe Biden's Daycare, Bonkerino, CCJ56, and Spark 8005. Appreciate you guys always jumping on the videos every single week. Let's jump into the charts. All right, like we always do, we're going to start off with the Bitcoin TABI model. On the TABI model, it is light orange again, meaning we are slightly overheated, not significantly so. We would need to go to dark orange, light red, or dark red. Still have 3 levels to go above, but right now we are just a click over neutral. Yellow is considered neutral. We are right up, kind of ping-ponging back and forth between the 100-day moving average and the short-term, not the 100-day moving average, excuse me. What is this going to be right here? Yeah. Oh, the 200-day moving average. We're ping-ponging back and forth between the 200-day moving average and the short-term holder cost basis. I forget, I keep it a different color here on this chart because I usually use yellow for the 200-day moving average, but it doesn't show up on the yellow background. But that dark red line there does. Excuse me. So the short-term holder cost base is currently right around 113,215. We have the true market mean has now raised up to 81,155. Remember, that's kind of the average price of the active coins that are on the network, not the dormant ones that have been, dormant for 15 years now, the Satoshi coins, or people that were in the early cypherpunk days and mined Bitcoin for a penny or 2 pennies or 3 pennies, right? Not those coins, but the coins that are the most likely to trade hands, like to actually move. Those are the true market mean, and that's sitting at 81,155. You'll also notice with the Meyer multiple, we were back down right at 1, right? So kind of have pooped the bed there. We are below 2 right now for the MVRVZ score. Usually you'll see that thing skyrocket up to 2.5, 3, 3.5, 4, right? In bull market. So we are still below that 2 threshold there. Not that it's a line in the sand, so to speak, but it just gives you an idea that it's kind of weak right now. And volatility did kind of come right back down. We had a little spike in the historical volatility. It came back down again, back below, looks like 45 or so. Moving on to the daily model on Bitcoin, structurally still in an uptrend. We didn't come back down and break the previous lows that we had. So that's looking good. We are sitting on this $105,000 block of volume. If I back out just a little bit, move that over, we'll be able to see. You can see how it juts out right here, this VRVP, visible range volume profile, and it almost acted as a shelf where the price came down to there and then bounced. It bounced on this level of support. Right now, the largest area, the point of control is down there just above 95,000, $96,500. That's the level we do not want to break. That would be bad moving forward. Do I see us going down that far? I don't, but anything is possible, right? So to the downside, we have strong support here at 105. some support at 100 and then down at 96.5 again. We are slightly mean reverted to the downside on the daily model. Same thing with RSI is below 50. And let's take a look at the liquidity. Liquidity did spike back up just a little bit. We're kind of bouncing on this 99.86 level that was resistance back here. We bounced on it and supported here. We bounced again here. We bounced again here. So that looks like the liquidity is about to take off. I do anticipate that we're going to have a lowering of the interest rates when they meet, and that makes sense. The prediction markets are pretty much at 100% right now. Everything is screaming that at least one more, if not two more interest rate cuts this year, and Bitcoin loves liquidity. It tends to flow right in and drive the price straight up. So that's what's going on the daily. If we go over to the 4-hour chart, still in a structural uptrend right there. Linear regression channel 0.76 on the Pearson coefficient. That's good. If we look at the support zone, remember this is that green box that I just keep extending to the right. We're supporting in it perfectly, bounced almost perfectly on the 200-day moving average. If I zoom in here, you can see that bounce. Boom, that candle closed on the 200-day moving average. The next candle opened on the 200-day moving average perfectly. And that is the most recent candle, right? 8 o'clock. That's the most recent candle right there. So we are bouncing and supporting on the 200-day moving average. We'd like to see us stay above it and use it for support versus dropping below it and using it as resistance. If we drop below it, remember the levels are 105, 100 and like 96, 96 and a half. To the downside, we are neutral on the mean reversion. We're close to 50 on RSI, and we're neutral on MACD. So right now, just kind of coasting sideways. It's almost like a lull or a calm before the storm. And you can see to the upside, significant resistance starts back up here at around 115 or so. We do have this short-term holder cost basis that we'd need to climb back through, because you can see where there's a lot of volume right there. And if we go and kind of move back to our left, we can see where that white line has been support back here. It was resistance right here. White line was both support, broke down, came back up, resisted, went up, supported on it. You can see right here. So areas, if you do nothing else, make sure you understand support and resistance. So to the upside, though, we've got to break back through that short-term holder cost basis, get through these two 50 and 100-day moving averages, and then back through this point of control up here that's at around 118,000, maybe just a click below 118,000. SOLBTC pair was screaming, right? Solana was outperforming Bitcoin, hit this big block of resistance up here, and popped right back down into the support zone. You see we're supporting on the 200-day moving average. Got a conclusive bounce on that, but still starting to trickle down and starting to trend down. We don't want to see the 200-day break down, because then it would just be a continuation of this general downtrend that we've seen since March of 2024. Do I anticipate that happening? No, not with the ETFs launching and with all this support that you see here. You can see this has been the point of control for the last couple of years, is really this 0.0016 level, 0.0016. That means it would take 0.0016 Bitcoin for every one Solana. Great place to swap Bitcoin over to Solana if you believe Solana is going to outperform over the next 3 to 6 months, which I do. And again, major resistance up here. You can see a block of resistance right here at 2.1, another one up here at 2.3, and another one up here at 2.42. Solana on the daily chart, had this powerful move to the upside, solid sell signal. So if you were following along, let's say you were in a perp long, perfect place to have exited the perp long, and we really haven't had another signal to go back in. Did I go back in? Yeah, I may have jumped the gun a little bit. It looks different on the 4-hour, which I'll show you here in a moment. But we are mean reverted significantly to the downside on the daily chart. You can see we're starting to get into that -1 standard deviations. We are also well below 50 on the RSI. We're tagging the bottom of this linear regression channel right here, and basically right in smack dab in the middle of the support zone with the 200-day moving average. If we come over to the 4-hour chart, you'll see what I was talking about. We did have a giant mean reversion down here and a buy signal. So kind of a fake out. Looked like things were going to take off and bounce from here. We did get a little bounce, but then immediately sold back off again, came back down to the 200-day. That's a double bottom right there on the 200-day moving average. Would love to see us hold this level right here, the 61.8% fib level, and start to climb back up again. This is all just so you have some numbers. This is around 182. And you have some more support down here at 178. You've got the 200-day moving average at 175. So let's say between 175, 185 current levels of support. Resistance to the upside, significant resistance is going to happen right where this big red line is, around 203, 204. That's been the point of control. We've got to work our way and grind back through that. We'll hit a little bit of resistance here at 196. Get some more right here in this 204 zone, a little bit more here at 208. And then we'll be tackling the 50-day moving average again at 215. ETH, because I usually forget when I'm traveling because I use a different computer than the one I use at home, but I've got it back on here again. And exactly like I said, I don't know how many times I've said it, this $5,000 level, that's like, it's a brick wall right now, a brick wall, right? Every single time it's made an attempt to go through it, hasn't gone through it. Does it mean it'll never go through it? No, it doesn't mean that. It just means that is significant resistance. And I said, anytime it gets near 5,000, 4,800, 4,900, 5,000, sounds like a auction dealer. But anytime it gets close to that, sell a portion, take profits. Don't be the guy that round trips this sucker all the way back down again. Like many of us, I've done it too, guys. Many of us have done in markets in the past. Right now, everything's neutral. Looking at the different metrics, well above the 200-day moving average, below the 100 and the 50. Support to the downside right here at this 36, almost $3,700 level. Also big area of support right here down at around $3,400. Going over to MicroStrategy. MicroStrategy, I know the chart looks funky because it's zoomed out a little bit, but this kind of gives you an idea that MicroStrategy right now, despite everything, is basically back at levels that we were at right after the election last year, right? Right after the election, we dropped down to these levels again in December. We were below the level that we're at right now back in February through April. And we touched this level back here at the end of September. And right now we are back we had dipped below the level that we're at right now and sitting on 300. 300 seems to be like a gravitational pull for MicroStrategy right now, as weird as that sounds, right? So it tends to be sitting there. Something interesting is this mNAV. The mNAV did creep back up again. It's at 1.22. It had crept up from being down here at 1.17, was as low as we saw it. I know Invest Answers has a arbitrage tracking spreadsheet. I have a spreadsheet that I've created for myself, and we were in lockstep on that. We both saw it hit 1.17. We both saw it go up to 1.22. So guys, that's incredibly, incredibly low. People are like, is the mNAV ever coming back? They're looking at some of these other treasury companies. What you have to remember is the other treasury companies, they don't have all the levers that MicroStrategy does, and even Metaplanet for that matter. I don't hold any Metaplanet, so just full disclaimer, that's why I don't cover it here. But with MicroStrategy, I do. I hold a significant amount of MicroStrategy, and they have levers to pull. Levers like all of the preferreds, the convertible bonds. They have so many different tools at their disposal that they don't just have to ATM the common shares all the time like a lot of the other ones do. So let's look at it now on a 4-hour chart. On the 4-hour chart, we are structurally in a downtrend ever since July 14th, or July 18th, excuse me. July 18th going down into the right, making lower highs and lower lows. And this hasn't changed, right? We have not broken out of this structural downtrend. Where is the bottom? Again, talking about it from before, we are in this level of support right now. It says previous support zone. I need to change these. So you guys have seen me do this before. Let me do one real quick just so you kind of see what I do. I go in here, I change this into a resistance zone because what was support is now resistance. This one, instead of saying current resistance zone, needs to be next resistance zone. And this guy up here, I would just leave it because that would be the next one after that. So those are the resistance zones to the upside. And this is, instead of previous, is the current support zone. And we just need to extend it to the right a little bit. So showing you guys this so you have an idea of what I do. Again, I'm not changing the levels. All I'm doing is moving it to the right to have an idea of where's the zone of support right now. The bottom of that is at 285. The top of that is at 305. So that $20 range was support and resistance back here. Now is support and resistance over here. If we break out of that, not if, when we break out of that to the upside, where will we start running into resistance again? Right here at 325. And that's going to be a lot of resistance all the way up to where the 200-day moving average is at 350. So 325 to 350 is going to be a bear to get through. Why? Look at this. Here's the red line, the point of control. Look at all of this volume right here. You have a lot of people that thought they had bought the bottom right here or back over here even, right? And they've held it for a year. They thought they bought the bottom. And eventually people just capitulate. I've watched it in the different communities, people saying, you know, MicroStrategy's done. I'm over this. It's never going to go anywhere. And they have a short-term vision or a high time preference, as Saifedean Amos would say. And so they just capitulate. They sell at the bottom, the absolute worst place to sell. Shares probably end up in the hands of an institution who is waiting until MicroStrategy gets added to the S&P 500 and Bitcoin moons to $150,000 plus. And that institution is going to capture all of that upside while the person that capitulated at the bottom realizes an actual loss. Now, if they have a lot of other gains and they're in a taxable account, maybe they want to realize some losses. But I don't know about you guys. I don't like to realize them unless I'm trying to balance out my tax loss gain at the end of the year, my realized loss and gain at the end of the year. So here we are. We have just been mean reverted more than 2 standard deviations to the downside again. RSI had dropped below 30 again. MACD crossed over again. So everything is saying this could be the bottom, right? It's almost like a double bottom right here. Sure, we went down a little bit further this second time, but this buy signal, guys, was spot on. The sell signal was spot on. This is something to trade right now, to sit there and hold it in hopes that it's just going to go up forever. Not the right way to handle MicroStrategy, in my opinion. I'm constantly selling covered calls on it that's generating income on a regular basis. I'm actually using a lot of that and going and buying STRC with it so that I can capture an additional 10.25% annual yield on that cash. So say I made $1,000 in profits off of the covered calls. Take the $1,000, go stick it into STRC, buy 10 shares of STRC, and turn around on those 10 shares and make $10.25 over the course of the year. Doesn't sound like much, but it's better than sit there and riding the sucker all the way into the ground, right? If it pulls back in a bear market. So just some tips there. Not financial advice, of course, just what I'm doing. Tesla on the daily chart. Tesla on the daily chart, you'll see we are in a solid structural uptrend ever since back here in April. Hard to believe that in April it was at 214, 215, let's call it. And right now in pre-market, we're at 446. That's more than a double since April with Tesla. So great call there. Invest Answers. You'll see here we are well above the 50-day moving average, the 100-day moving average, and the 200-day moving average. We never really tested. We kind of did. We got a little test of the 200-day moving average from the upside here, but we have some gaps along the way. You see this yellow box here, here, and here. These gap ups, these three that you see, never filled completely. There's part of me that believes that we're going to go back and fill those. You can see how very little volume filled in right here. And if you remember from the Bitcoin chart, we talked about, you know, when you see this big gaping hole of volume, there's some shares that exchange hands there. But when you see this big gaping hole of volume, oftentimes this will fill back in by it just trading down through that range. It'll get bought up super quick if it goes into that range, because I know a lot of us, this is our zone to buy right now. Anything below 400, we're like going to jump on that with Tesla. Now, something also interesting is if you change the time frame. So if I get rid of the price action from a year ago, now you can really see the hole over here. I mean, there are some levels, like including at 400, which is a round number. It's like a psychological level, let's call it, that no shares even traded at. Tesla on the 4-hour, you can see it here on the, excuse me, on the 4-hour also, you can see where there's no volume over there at these levels. Do I anticipate that fills in? Sure. Does it have to? No. So we'll see. We've got earnings tomorrow afternoon after the close of business. So Wednesday, the 22nd, and that'll be at 4:30-ish p.m. Eastern Standard Time, or Eastern Daylight Time. We're still in daylight time right now. So that's going to happen tomorrow. What could happen? I've shown you before, so for sake of time, I'm not going to go back. But it's you either go sideways after earnings, up, or you go down, right? I mean, you really only have those three choices. Sideways almost never happens. If you look back in history for the last 3-4 years after Tesla earnings, it typically skyrockets or it tanks. And how do you know which it's going to be? You really don't, because it doesn't mean if they beat earnings, it automatically goes up. There's been some that are green. See here, this is green. That means they beat earnings. And what did it do immediately afterwards? It actually dropped, right? And then we got a little bounce back up again. Not a huge drop, but it was a drop. Other times you'll have a bad earnings, meaning this will be red. It means they did not meet their earnings expectations. And you'll see it do this. So a lot of it is based on the guidance that's given by Elon and the team, not necessarily what the results were for the quarter, number one. Number two, that guidance is forward-looking. It's what do the next 3 months look like? That's what Wall Street cares about, is the next 3 months. So what do I anticipate right now? Well, we could come back down and retest this blob of volume that you see down here. The top of that is at 350. Do I think that's likely? I'd assign it a 20 to 25% chance. I do think we go back and we see 400 again at some point, although we did wick down here in post-market, and that wicked down to $400.67 was the low here last Friday during all that capitulation that we saw last Friday. So could happen. Nvidia, over here on Nvidia, what do we got going on there, guys? We have still a super strong uptrend, although it's stalled. You notice that we're kind of running into resistance here around this 185 level. We hit it, we bounced off of it and pulled back. We hit it, we bounced off of it, pulled back over and over and over again. Then we had this one wick up, all the way, like a lot of excitement, all the way up to 195, and that excitement was short-lived and straight back down to the 50-day moving average. What I want you to see is look at how it keeps using the 50 as support right here. Boom, right along there. I mean, these candles, all four of them have either the body or the wick going down to the 50-day moving average. All along here, we were supporting on it. So if you're a trader, that may be a good support zone to turn around and buy Nvidia. Again, not financial advice, just talking numbers here. And on the other hand, anytime we get up into this resistance zone, which extends from 185 to 190, that may be a good place to sell or sell covered calls, right? So sell puts down here, sell covered calls up there, or buy shares down here, sell shares up there. Sure, it's only a $10 move, but a $10 move, that's a 5% move, and it can do that in a day, making 5% a day. I mean, that adds up if you hit a lot of wins in a row like that. Here it is on the 4-hour extended trading hour chart. And you can see this, here's this volume, this big block that we were talking about down here at 170, goes all the way down to 175 and up here to about 183. So this is the area of support we're talking about right here. And then to the upside, we've got resistance, and the resistance really kicks in. Sure, we've broken above it just barely for a hot minute, but that resistance is up to about 190 right now. We are mean reverted to the downside, so these are typically buying signals. RSI made it down to 35, didn't get all the way down to 30, but that still means it's oversold, needs to be bought. And we have the MACD crossover right here. Crossovers typically signal a good place to buy. It means that the momentum has shifted, and now we're already heading back up again. That's the moving average convergence divergence. Throwing on an extra here, that's Palantir, because that's one that I've actually been holding now for a while. I do have a series of covered calls on at 190, and those look perfect. You know, we got up there close to it back here in August, and we've got close to it a couple times here. perfect place to have them on. If I need to roll them, I'll roll them. Again, this is a trader for me. It's not necessarily I'm going to hold it for life, and I'm not attached necessarily to the shares. It has had a meteoric rise from 65. It's basically tripled over the last since April 7th. So this is one with the world in the state that it's in, and wars popping up everywhere, and all the hatred and military actions and everything else. And do I condone those? Absolutely not. The thing I like about Palantir is it's kind of on the defense. It's not on the offense going out there trying to take people out. It's on the defense trying to protect people, at least from what I understand of the country. So that's why I was, or of the company. And so that's why I was willing to jump in on some Palantir. MicroStrategy Tesla pair, guys, you know, I'll say it every time. I believe that 1-to-1 was the bottom. Then all of a sudden, Saylor changed his mind about ATMing, and boom, MicroStrategy sold off in relation to Tesla. And then Elon turned around and bought $1 billion worth of Tesla. And that just sealed the fate that it was going to drop down. 0.7 has been a level of support. We broke below that. Now we're down to 0.66, right? 0.66 here on the chart. That means it takes 0.66 shares of Tesla to buy one MicroStrategy share. Or for every one Tesla that you have, you're almost getting 2 shares of MicroStrategy, right? That would be at 0.5 if that were the case. We are significantly mean reverted again to the downside, like in a huge sort of way right here. And we have a buy signal showing up. The trend is still down though. And again, this is just one. Which do you believe in over the long haul, right? Tesla has had a meteoric rise. We just showed you that up to 446, while MicroStrategy has pooped and dropped below 300. If you believe that Bitcoin still has some wings, and you believe that MicroStrategy's mNAV will climb back up from 1.2, let's call it 1.17 to 1.22, so 1.2 back up to 1.5, then MicroStrategy will go right back up over 400 again a share. If that's the case, swapping some Tesla over into MicroStrategy at these levels would be a smart move, especially if you think Tesla sells off a little bit after earnings. With your whole bag, nope, I would never do it with my whole bag. Have I done it with some of my bag? Absolutely, because I've taken some profits. I've made money on Tesla. Why not take a little bit of profits off the table at that 450, 460 level, which I did, and roll that over into MicroStrategy when it was down. At that time, it was sitting at about 300 to 310 or 320. So it was still about the same ratio that we're at right now. So anyway, wanted to share that one with you. We are back down to levels that we were at basically a year ago. So exactly 1 year ago, we were at these levels, this 0.66 level. How much further down can it go? It could go all the way down to 0.1 if it wanted to, right? That would mean that Tesla goes to $1,000 a share and MicroStrategy drops to $100 a share. Do I see that? No, I don't see that happening. Eventually, we're going to find a bottom, and I do believe that this reverses course, but it's been all Tesla since the middle of July, right? MicroStrategy hit that high and then sold off hard all the way through where we are now. Meanwhile, Tesla has been grinding up all the way since April. And once it started to grind up and past MicroStrategy, which was at this 1-to-1 level now, Tesla is at a higher price. And that's why the ratios are what they are. Here we have the MicroStrategy IBIT pair. MicroStrategy IBIT pair sitting at 4.74. Again, I thought that 5.5 was the floor. I did move 100 IBIT into 18 MicroStrategy at that level right there. I'm slightly overweight MicroStrategy when compared to, let's say, pure form Bitcoin, whether that's IBIT or actual Bitcoin. So am I going to move more over? No, that was an experiment to see what happens. But in either case, if MicroStrategy goes up or IBIT goes up, I'm going to win because I have shares of both. I just moved some of my IBIT over to MicroStrategy there. You want to do that when they're out of the bottom of the cloud. So here on the right-hand graph, you can see we're down out of the bottom of the cloud. That coincides with a bottoming over here. Same thing, we went down to the very bottom of the cloud right here. That coincides with a buy signal over here. And we were close to the bottom of the cloud right here, not quite out of it though. And that coincides over here. So whether you're using ARB Cloud, which is what I have on the right-hand graph, or you're using IADSS with the triple confluence where you have the double confluence. You have confluence turned on twice, which creates these 3 zones. Either one of those have been suggesting IBIT to MicroStrategy. Again, it's just a matter of when MicroStrategy finally runs. And IBIT by itself is just going to track Bitcoin, so I don't really share that chart. 2 to go. This is the rotation model. You'll notice that we did get a signal to go into MicroStrategy here on Friday. And you'll notice I didn't put a circle around it and a check mark. That's because I'm already overweight MicroStrategy. And so rather than selling the Palantir right now and moving that into MicroStrategy, I'm going to skip this signal that I see right here, which indeed would invalidate the results that you're seeing. You know, some of these results boxes or back testing results here on the rotation model. Guys, remember, rotation model for me was just a test. I like to actively trade, and I like to actively trade each of my individual stocks. So rather than just following the rotation model blindly, I mean, I gave it a good old college try here for a few months. I realized it's probably not for me. It doesn't mean it's not for everybody, right? If you want to be a less active investor, kind of set it and forget it and maybe make one trade every 1, 2, 3 weeks, it could potentially be your tool that you're looking for. But for me, IADSS is my tool, but I show this each time and I'm honest about where I move into things. Like here, it said that I should have sold Nvidia for Palantir. And if I remember correctly, I sold MicroStrategy for Palantir because I just needed to raise the cash to buy the Palantir from somewhere. And I've had this MicroStrategy for years now. So it's still in a significant profit. Finally, the MicroStrategy preferreds. We've got the preferreds over here, STRK, STRD, STRF, STRC. I just made another video about STRC yesterday. I'll go ahead and link to it right here. And where I went in there and I talked about if you had $1 million, yesterday you would have been able to buy 10,200 shares, something like that. I'm trying to remember off of memory. And you took the dividends from STRC and reinvested them. Remember, it's a return of capital, and you reinvested them for 10 years. So every month you get the dividend. It's about a little over $8,000, almost $9,000 a month. You reinvest that dividend back into STRC. And at the end of 10 years, your $1 million turns into $2.8 million, kicking off $24,000 a month in income. So if you want to see that video, again, I've got the link to the video. I'm seeing a lot of confusion around these things. People trying to trade STRC, and they're selling covered calls against it and selling puts against it, trying to squeeze out an extra few pennies worth of return. That's not what these are designed for. These are fixed income products. People are buying them for the yield. STRK, they're buying it for the 8% yield and the call option convertibility, meaning you can take 10 shares of STRK and turn it into 1 share of MicroStrategy. That's why people are buying STRK. You'll also note that the price varies wildly. It depends on the performance of MicroStrategy, the common shares. If the common shares are pooping the bed like they have been, you'll notice that STRK is well below par value. On the other hand, when MicroStrategy was banging back in the summertime, you notice STRK was flying. It was up there in the 115, 120 range. STRD, that's the junk bond grade, right? That's designed to trade. So right now, people can buy it at $80, and their effective yield is not 10%. It's more like 12.5 to 13% yield. Because remember, $100 buys you more than 1 share right now. So if you had $1,000, you're not going to only get 10 shares of STRD. You're going to get like 12 or 13 shares of STRD. So you're increasing your yield that way. I hope that makes sense. STRF, that's the long duration. That's better for pension funds and things like that. Why did I jump on it when it first came out? Because that was the best choice I thought of the ones that I saw. Put money in STRF, park it there for years, make a 10% annual yield or $2.50 a share every quarter, but it paid out quarterly. That doesn't work like a money market. A money market pays out monthly. That was quarterly. Then STRC came along, and STRC pays out monthly like a money market. It also has a variable interest rate designed to keep the price of STRC tight, like between 99 and 101. And you go, well, it's at 98.78 right now. It's not at 99. Correct. They may say that next month they increase the dividend another 0.25%. See, these things are so over collateralized that Michael Saylor and his team over at Strategy can do whatever they want basically with that interest rate to bring the price back up close to par value, which is 100. But you will notice that there's this giant red line here on STRC at $97.50. So that is pretty much the point of control. And I know I have clients that say, well, I'm going to time it and buy it when it drops down there. It's never a guarantee that it's going to drop down there. What you'll notice is there was a lot more variability when it first launched. And then all of a sudden people are like, okay, this thing's starting to hold its value closer to par value. And we got right up at par value here. Then it sold off. And after the dividend, here's the dividend. It's not unusual for it to drop close to $1 after the dividend payout. In this case, it dropped from around $99 and it wicked as low as 96.5 and then boom, came right back up above 97.5. So if you think about it, 99, you take $1 off that, it would drop to 98. 98 is kind of the floor that you should expect with STRC. So if you're going to be putting in millions of dollars, yeah, you may want to go ahead and wait for that $98 price. But otherwise, put it in there. Like I just am constantly moving profits into STRC. My whole thought process is grow a giant bag of STRC and then live off the dividends in the future, right? And I don't even have to touch then any of my other assets. I can let Nvidia go to the moon, Tesla go to the moon, MicroStrategy go to the moon, Palantir go to the moon. IBIT go to the moon, Bitcoin go to the moon, and Solana go to the moon, right? And you're like, well, how are you taking profits? Selling covered calls against those, taking that cash and immediately sliding it over into STRC. All right, guys, I hope you found value in this today. If you did, smash that like button. I appreciate it. I read every single comment, so drop a comment below. Tell me, what did you like best? What did you learn today? And what would you like to see more of? Make sure you're subscribed to the channel. You don't want to miss any of the ones that not only I'm putting out, but other people like me. There's a lot of quality content going out right now where people are trying to help you be able to read the charts, be able to learn how to trade better. So if you're subscribed to this channel, you'll see other channels like it. Finally, book a course with me or join the community. That's over at gdenarocoaching.com. These are just a few of the same testimonials that I've had up over the last year or two. You'll see some of those getting changed out here in the over the next few weeks. And here's one that just came in literally yesterday or day before. JJ said, me finding the confidence to get started trading options. This person, JJ, already had mostly theory, right? They had the theory down pat, but they didn't have the confidence to get started trading options. They said that was the best money they ever spent. My ROI with you, Gary, so far is 6,185%. It's just ridiculous. Meaning the amount of money they spent on my course and or a coaching appointment, they've made that back with a 61 almost 6,200% return. So call that a 63x on their money. They made an investment. That's like investing $100 and making $6,300, right, on your investment. So they were very happy with the coaching that they got. And finally, guys, I'm G Denaro. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time. Take care.